Is a 2.6 billion SHIB outflow the beginning of a crypto gold rush or the greatest bull trap of the year?
In the last 24 hours, over 2.6 billion SHIB tokens have vanished from crypto exchanges. Headlines claim this signals skyrocketing confidence and a potential price surge. But is that really the whole story?
Some analysts point out that over 2.6 trillion SHIB leaving exchanges recently has reduced immediate selling pressure, making room for a rally. At the same time, Google Trends show renewed interest in Shiba Inu, and one prominent analyst is even predicting a run toward 8.1 millionths of a dollar per token. But before you jump in, consider this. Whenever the market gets swept up in meme coin fever, opportunities for quick gains are real, but so is the risk of being the last to buy before smart money cashes out. SHIB's past rallies have trapped latecomers before, and with the hype machine in full gear, it's crucial to ask, are whales truly betting on a breakout or just setting up the next round of bag holders? Jumping into SHIB right now could deliver life-changing profits or leave you regretting a FOMO move just before a sharp reversal. Let's break down what's really happening behind the scenes and what every SHIB investor needs to know before making a move. Coming up, we'll unpack the real meaning behind these SHIB outflows, spotlight crucial warning signs, and reveal how to spot the difference between a true rally and a bull trap. Before we declare a Shiba Inu moon mission, let's stop and ask, what really drives this meme coin, and who are the power players moving billions behind the scenes? Shiba Inu, or SHIB, exploded onto the scene as a so-called Dogecoin killer, but it quickly became more than just another internet joke. With a playful mascot and ultra-low token price, SHIB turned small bets into life-changing wins for early holders, fueling a cult-like community and massive online buzz. But under the memes lies a complex mechanism. SHIB was built on the Ethereum blockchain, using smart contracts to power projects like Shiba Swap and ambitious plans for metaverse integration. Thanks to its decentralized structure, major decisions are often shaped by a vocal, sometimes unpredictable community. Historically, SHIB has experienced ferocious rallies and brutal crashes. In late 2021, SHIB skyrocketed over 26 million% from its launch price, making headlines everywhere. But those gains came with wild volatility. After a strong start, the token has dropped by more than 42% this year alone. That's a reminder, timing is everything in meme coin land. So what makes meme coins like SHIB tick? Unlike traditional investments, meme coins move on social sentiment, viral trends, and coordinated action by whales, crypto's biggest holders. Whale moves can make or break a rally in minutes. For SHIB, these whales often pull off billion-dollar trades that send shockwaves through the market. Lately, SHIB has been back in the spotlight. Just recently, it reclaimed its 50-day exponential moving average around 0.000013, a key technical milestone according to analysts. Breaking above these moving averages can act as a launchpad for price increases, priming SHIB for another potential run. Exchange activity tells an even bigger story. Over 2.6 billion SHIB tokens reportedly flowed out of exchanges in just 24 hours. This kind of outflow suggests investors are locking up tokens in private wallets, reducing sell pressure and signaling bullish intent. As one article put it, SHIB has recently broken significant short-term moving averages, launchpad for price increases. Whales are on the move too. In the past week alone, more than 2.5 billion SHIB left the top 10 wallets, likely setting up for dramatic market moves. A millionaire trader has even predicted the start of meme coin season, forecasting a 156% SHIB rally in the near future. But don't let the hype fool you. The meme coin market is a playground for rapid reversals, fakeouts, and bull traps. Misunderstanding SHIB's mechanics or ignoring its history has cost many investors dearly. The difference between catching the next rocket and getting left holding the bag can come down to split-second timing and a clear-eyed look at the data. So what's really fueling the current bullish sentiment? And do the numbers back up the hype? Let's dig into the latest exchange flows, whale moves, and technical signals to find out where SHIB could go next. Get ready, because up next, we break down the data driving the current Shiba Inu buzz, from whale withdrawals to technical indicators, and see if the numbers confirm the hype. Before you get swept away by the Shiba Inu hype, ask yourself, is this outflow a real signal for moonshots or a classic setup for a brutal bull trap? The difference could mean catching life-changing gains or watching your stack evaporate in hours. Let's break down what is actually happening in the SHIB market right now. In just the past 24 hours, more than 2 billion SHIB tokens have vanished from the top 10 tracked wallets. Gone. Pulled out. That is not just a blip. It is paired with over 2.5 billion tokens recently yanked off exchanges, setting off sirens for both risk takers and cautious players. Historically, when whales move this much SHIB out of exchanges, it usually means they are locking up tokens in private wallets and preparing for a bigger move, betting on the price to rocket higher. Sellers are losing their grip fast. Exchange reserves now hover near 85 trillion tokens. If these outflows keep up and inflows stay sluggish, the available SHIB on exchanges will keep shrinking. That supply crunch could send prices soaring, simply because there will not be enough tokens for all the eager buyers. As one recent analysis put it, as long as outflows remain strong and inflows slow, SHIB may experience a rapid price surge due to short supply at exchanges. Technically, the charts are heating up and flashing signals that demand your attention. Shiba Inu is now trading above its key moving averages and is testing resistance in the 0.000014 to 0.000015 zone. Momentum is building. The relative strength index sits at a neutral 55.63, with bullish pressure mounting just below resistance. Momentum indicators are showing that buyers are stepping in, and network activity is ticking up. Signs that a big move could be brewing. But here is your micro warning. Just days ago, a sudden inflow of 60 billion SHIB flooded back onto exchanges, spiking reserves and hinting that some whales might be getting ready to cash out on this very rally. This kind of inflow is a danger sign, suggesting that not everyone is betting on the upside. Some heavy hitters might be preparing to dump their bags at the first sign of euphoria. Another red flag is flashing Shiba Inu price could trap bulls unless it clears one key level. If SHIB cannot smash through that stubborn resistance, latecomers could end up buying the very top, only to watch prices collapse as whales offload their tokens for profit. So is this latest round of FOMO really justified, or are we staring at a perfect setup for a painful bull trap? With technicals firing up and whales shaking up the order book, the stakes could not be higher. In the next few days, SHIB holders will either ride the rocket to epic gains or get blindsided by a devastating dump. But before you make your next move, you need to know exactly where the biggest risks and opportunities are hiding. Let's break down the signals you cannot afford to ignore. Imagine waking up to see your Shiba Inu portfolio doubled, or wiped out while you slept. This is not just hype. If you miss the next major move, you could lose out on thousands or watch your gains vanish in a flash. Right now, the market is crackling with potential. Technical analysts are eyeing a rounded double bottom pattern, fueling talk of a possible 200% rally if Shiba Inu surges, especially with the Leash version 2 migration promising tighter security and expansion across new chains. Whales are yanking billions of tokens off exchanges, slashing instant selling pressure and amping up bullish energy. But this is a knife's edge. If Shiba Inu finally breaks through the stubborn ceiling near 0.000015, momentum could snowball rapidly, and if you are not positioned right, you could miss out on a life-changing run.
Google search interest keeps climbing, and some forecasters are floating a target of 0.000081, meaning early holders could see fortunes shift almost overnight. Still, the threat of a sudden crash is just as real. History shows that as soon as exchange inflows spike, renewed selling can slam the brakes on rallies. If whales or big traders start moving SHIB back onto exchanges, the mood can flip from euphoria to panic in mere hours, and you could get caught on the wrong side of the trade. Even a boring sideways drift could cost you. Shiba Inu has already fallen more than 40% since January, and if resistance holds, the price could chop in a tight range, trapping both bulls and bears. Money might stampede into new meme coins like Little Pepe. Analysts are calling for a jaw-dropping 19,377% surge in 2025, or into fast movers like Remitix, which has already jumped six-fold recently. The wild card is whale psychology. If big holders sense retail traders piling in too late, they could dump in mass, triggering sudden crashes and wiping out latecomers. But if new catalysts, like the Leash version 2 upgrade or a spike in network activity, land at just the right moment, it could ignite a fresh meme coin mania, handing eye-watering profits to those who spot the signal first. Bottom line, the next Shiba Inu move could blindside everyone. Fortunes will be made or lost in moments, and whether you win or lose hinges on reading these signals before the herd catches on. But how do you actually spot the warning signs, or green lights, before the crowd? Let's break down the key indicators you need to watch next. When the next SHIB headline drops, will you know what to do? Or will you panic with the crowd? Your ability to separate signal from noise is the single biggest factor in surviving and thriving in the wild world of meme coin cycles. Right now, everyone is buzzing about Shiba Inu's massive outflows. Over 2.6 billion tokens left exchanges in just 24 hours, and whales are moving millions more. But before you rush to buy, let's break down exactly what these moves mean and how you can read the whale activity like a pro. First, track whale wallets and big transactions using on-chain analytics platforms such as Etherscan or Whale Alert. When you see whale withdrawals from exchanges, it usually means those holders expect prices to go up and want to secure their assets away from instant selling pressure. But remember, not all whale moves are bullish. Sometimes whales pull tokens off exchanges to create artificial scarcity, only to send them back for a sudden sell-off. That's why monitoring both inflows and outflows is crucial. A steady rise in exchange inflows, tokens moving back onto exchanges, can warn of brewing selling pressure and possible price drops. Next, analyze exchange reserves and network activity. Recent data shows SHIB's exchange reserves fell sharply, while transaction volume grew by about 1.22%. This uptick often hints at a revival in network activity, which can be a bullish sign. But if you spot exchange reserves starting to creep up again, that's a red flag, especially if social media hype is peaking at the same time. Technical indicators matter too. Watch for SHIB reclaiming major moving averages like the 50-day EMA. According to recent analysis, technical and sentiment indicators now suggest upside potential for SHIB, with some experts predicting a possible 156% rally or more. Still, even the most bullish research warns that traders looking to ride this momentum may need to think twice. Key resistance levels could trap overzealous buyers. To avoid FOMO mistakes, use tools like TradingView to keep an eye on support and resistance zones and RSI levels. If you see the RSI heating up past 70, you're likely entering overbought territory where corrections are common. Risk management is non-negotiable. Never invest more than you can afford to lose, and always set clear stop losses to lock in gains or minimize losses if the market turns on you. Bottom line, the hype around whale moves and exchange outflows can be real, but traps set for latecomers are just as real. Are you prepared to read these signals, or are you another fish waiting to be caught? So, is SHIB a generational opportunity, or just another meme coin mirage? Let's settle the score and cut through the noise.
Blink and you might miss the next meme coin moon or get caught in the crash. Meme coins reward the bold but punish the reckless. So what's your next play? Right now, Shiba Inu is flashing urgent breakout signals. Over 2.6 billion SHIB left exchanges in just 24 hours. Whale wallets are shifting, and the 50-day moving average has been shattered. Some analysts are betting on a huge surge toward 8.1 cents if this momentum continues, but rising network activity and transaction volumes mean the stakes are higher than ever. But here's the catch. Every crypto rally tempts you to chase green candles and headlines. SHIB still faces massive resistance between 1.4 and 1.5 cents. Bulls risk getting trapped if new inflows hit exchanges and spark a sudden wave of sell pressure. A quick 7.2% weekly gain could vanish in a flash if sentiment flips. Meme coins are infamous for wild swings and unpredictability. While whales and bullish forecasts are fueling excitement, the same volatility that mints overnight millionaires can erase entire portfolios in minutes. As meme coin season heats up, new tokens are stealing attention, and hype alone won't shield your profits. Is the SHIB rally about to explode? Or is it just another carefully disguised trap? Only the evidence can guide you. Ignore the crowd, weigh both the bullish data and hidden risks, and act on facts, not FOMO. Your next move, holding, selling, or waiting, could mean you ride the next meme wave or end up as exit liquidity for bigger players. Stay alert and sharpen your strategy, because the next twist in Shiba Inu saga could be seconds away. In the next segment, we'll break down how to spot real breakout signals and avoid becoming exit liquidity. Stick around to learn what smart money is watching now.